Hello and welcome to Trading Guide for Beginners. Today is November 26, 2022. In today's video, we're going to plan our trade using these 7 steps. I'm going to show you guys chart patterns and also going to implement our previous lesson into today's episode. So, what are the 7 parts, the 7 steps of planning our trade? First step, you gotta choose your time frame. If you work 9 to 5, I doubt you're gonna use day trade. Most likely, you're going to swing trade or you're gonna be a position trader. Our next step is going to manage our risk. Then later, we're going to determine the condition of the specific stock. We're going to focus on equities for the purpose of today's video, and then I'm going to show you guys the entry. It's going to be pullback, breakout. I do not trade based off of news. In my opinion, this is a horrible idea, and this is where the retail, the street people like beginners just get wrecked. This is a space where you get wrecked. The market steals your money away, and then you get upset on the market for the rest of your life, and then you miss out on the fantastic opportunities. And later we're going to have our stop. We're going to choose our targets, and eventually, when we go over through these 7 steps, our trade should result in success. Okay, so before we before we go to Apple Stock, I want to show you guys these patterns. This is a cheat sheet. I strongly encourage you to take photo of this and memorize this, just like you memorized back in kindergarten. What's 2 times 2, 4 times 4? So this sheet shows us bullish and bearish patterns. It also tells us reversals. And what I like about this 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 cheat sheet is it tells you exactly our entry, where our entry should be, okay, where our take profit should be. This take profit is the distance from this trend line. Same thing with this. And then our stop loss. This is the place where we completely exit the position, and that's it. You take a loss and you move on to a different stock, or you wait for perfect setup. Because keep in mind, not every position. There's only certain times in the market that are perfect for entering your position. Okay. But before we do that, let's try to draw some sort of patterns, bullish, bearish. Let's see. Let's try to find out what this chart is telling us. Okay, I can clearly see a rejection off of this trend line. When you do trend line, make sure you use at least three touch points. Okay, to help you navigate through the market. Keep in mind that let's go back to the daily chart. Keep in mind that you can have a bigger pattern inside. Sorry, you can have small patterns inside the big patterns to give you a better understanding of the markets. Okay, of where the market's going to go to. So when we move back to a 4-hour chart, this is at least what 1 year distance. Yeah, from here this is 22, this is 23. It's almost 1 year. So this took out 1 year to play out. So that's a long time. This is why it's a process. It's a process that takes time. It's a process that you need to trust and plan it so you can stick to the plan and have your trade successful. Another trend line that I can on a smaller time frame that I can draw is most likely probably like over here. Yeah, we can see some sort of price action. Okay, we see some sort of structure. Here we go. Okay, where the price sold off, bounced back, got rejected, sold off, bounced back, got rejected, sold off, bounce back again, got rejected, sell off, bounce, and beautiful sell off. So this is, I guess, I call this naked charting. Let me also draw support over here because we can clearly see that this this low is higher than this one. This low is higher than previous two. This low is higher than previous three, and then this low is higher than previous four. So we can clearly draw a trend line over here. Okay. So what does this reminds me of? What does this looks like to me? This looks like to me like a bullish structure. Okay. We have a nice pull. We got some sort of consolidation flag, triangle wedge. And now the market is trying to make up its mind to see, trying to figure out where it's going to break out to. Is it going to be upside? Is it going to be downside? From the upside, we got some sort of resistance, as you guys can see. So we need to break through this line first before we can talk about of going up to this price. Because if we never break up through this line, okay, if we never break out through here, but we break down, where we're going to go? Most likely over here. So this is why you need to wait for the market to give you, you need to wait for the markets to decide where it wants to go. Do not front run the market. Don't try to be as smart as and be like, okay, I'm going to buy over here because I'm convinced the market's going to go to the upside. What about if it does not? Okay. If it doesn't, you lose 7%. If it does goes up, you gain 12. But I like to play safe. I like to eat the stew from the middle, okay? What I mean eating the stew from the middle. So if you have let's say a cookie, Oreo cookie, okay? You got the cookie over here and then you have the delicious sweet stew in the middle. So my goal is to try to eat this away. Take the stew away, put in my wallet, make that gain, close position, bada bing, bada boom, out. So when we think about this price action, okay, when you think about this as a stoof, okay, as a stoof, all right. So for the purpose of this video, since this is a beginner's guide, we're not going to be shorting stocks. This is going to come on later on along the videos. So stay tuned, subscribe to my channel, comment below. It helps me understand what exactly you guys want to learn, or what you guys are struggling with. So if the price breaks above to the upside, okay, this is where we're gonna eat our stew. But enough of the bullshit talk. Let me draw this back. So we've determined our pattern. Okay, now we have some sort of continuation, maybe ascending wedge, maybe bullish flag. Okay, but what is the bigger trade? What is the bigger picture? What is Apple heading from a bigger perspective? From the bigger perspective, how do we know? Is it going up, down, sideways? From this, you can't tell. So this is where the 200-day moving average comes through, and it's going to help us determine the direction of the markets. Okay, when we go back to the daily candle chart, you can notice that since May 4th, majority of the price has been below my 200-day moving average. It tells me that the price wants to go down. It tells me that the price is the momentum is bearish to the downside. So higher probabilities are to the downside. This is why people take profit in these areas, because they do realize that we are trending downward and these gains are unsustainable to the upside. So people sell, take the profits, and run away. Okay, so we have our time frame daily for our candle. We draw our patterns inside over here. Now we're going to determine the condition. Is the price ranging? Is the price trending? You can have both. You can have price trending, okay, and then we can have on a smaller frame, we can have a price ranging. So our next entry is going to be a breakout. It's not a pullback, because pullbacks are reversals to the means of the bigger time frames. I'm going to aim for a pullback. I'm going to wait for the price to tell me what it wants to do. Okay. What about if the price wants to continue going like this for the next 2 weeks? Okay. We can have on Monday, the price can break out, retest the 200-day moving average, and then go back up again. And what do I mean retesting the 400-day moving average? How does this look like? Or generally speaking, how does the retest look like? You have over here, this is a perfect example of a nice retest. You have a sell-off to some sort of support, okay? You have bounce, you have rejection, you have bounce back, sell-off to the support, and then you guys can see a nice breakout. So this is what I'm aiming for to happen in this part over here. And how would I trade this position? This how would I trade this as an example? Okay, how would I trade that? I can see a clear trend line. Okay, we got one touch point, two touch point, three, four, five. We have a clear support. We have a clear support over here. So the thing that you do, obviously, if you're narcissistic, go ahead, buy over here. But you don't know what the market's going to do. You don't know if the market's going to keep on going down. Okay, you have no clue whatsoever. So this is why you wait. You wait for the price to break out of this triangle. Okay. So you might be thinking, at this given moment, people were like, "Oh shit, I'm definitely not buying because the stock went up already 3.8%. It's stupid to buy. I'm gonna wait for a pullback. I'm gonna wait for the pullback. Good luck waiting for the pullback. It ain't happening at all until some sort of consolidation over here." So if you can choose, you can enter your position with three different options. You can buy the open, you can buy the close, or you can wait for the price to close above this specific resistance. Okay, so let's say just in case, let's say you buy over here and you take it over here. Look guys, 6%, easy 6% on the market. So this is what I'm looking for forward to happen over here. Same thing, hopefully the price breaks up, we buy somewhere in the middle, and we make easy 6-7%. If the price drops down below, you have your stop loss in place to protect you from continuation of the price to the downside. And if the price breaks up above over here, what is from here? Yeah, it's easy, 3%. That's possible, just like over here. You can pop up higher. Your stop loss would have been from the buy entry all the way to either the 200-day moving average, the resistance line, or even a little bit lower. You can, you can make it towards this pennant. So we have our stop loss in place. We have our price targets. How do you determine the price target? So as you guys can see from this pennant, okay, we have a pole. And I'm assuming this pole will take us over here. See, perfect, depending where the price breaks up. Depending where the price breaks. So what I usually do is I take half my profit in the middle, and I let the other half continue to go to the upside. So we'll see what's going to happen over here. We'll see what's going to happen over here. Okay. And I'm going to break this down furthermore along the way when the price, when the Apple just continues its journey, when it chooses its way, specific way. So hopefully I helped you guys understand how to plan your trade, okay? When to exit, to understand the bigger picture of the market. Comment below any questions that you have. I'll be more than happy to make any sort of updates or clarify anything that you guys can be interested in. And keep in mind, this is just a beginner's video. This is second episode, and later on, I'm gonna show you guys different indicators that I use. I'm gonna go more into details, more advanced things to help you understand the direction of the market. So, few key takeaways from today's video. Try to understand what is the price. Is it above? Is it above the 200-day moving average? Is it below the 200-day moving average? Because what I've noticed is that in the bear market, okay, when the price is below the 200-day moving average, majority of the bullish majority of the bullish trends break to the downside, meaning that we see a lot of fake outs. Okay, when the price pops up above, like over here, pops above and then reverses itself. This is another example. Price pops up above, drops again, pops up above, drops again below. And so keep that in mind. This is why we gotta have our stop loss in place. And if the trade goes against you, that's it. Take your loss and try to find a different setup and move on, because losing money is part of this game. Okay, you are going to lose some money no matter what. The goal is to minimize the losses as much as possible. Okay, and then continue the gains. Let your runners run. So at the end of the year, when let's say you do 30 trades and you lose 2% or 1% on each trade, actually, no, I'm not going to, because that's 100% loss ratio. Let's say you lose on 15 trades. Let's say, okay, yeah, I lose 15 trades, 1 or 2%. That means 30%. But then on every remaining 15 trades, you've gained 2-3%. That's about 45% gain. So you made 15, 30 losses. You've gained 45%. Bottom line is you're still 50% above the stock market. You just beat the S&P 500, which averages yearly around 7%. So thank you so much, guys. Please comment below, give me a thumbs up, and I'll see you guys in the next coming video that will be updating, posting every single day. So stay tuned. Thank you so much. Have a nice day. Enjoy your weekend. Bye bye.